Welcome to Illuminati Silver. We tell the truth about silver. Today is Tuesday the 9th of March 2021 and we're reporting that there's been a reversal in gold and silver prices. They're going up again. But so too are equity markets and the Nasdaq in particular. So let's take a look. Now yesterday we published a video entitled Gold and Silver Fall Further as Meghan and Harry Spill the Beans, which, in support of our weekly update, which was published on Saturday, links to both are provided below, we announced that the Senate passing the Biden COVID-19 $1.9 trillion stimulus package saw gold rise in the first 2 hours of trading on Monday to $1,714, but then fell back and lower to $1,682 when we actually produced the video. Silver did virtually the same in the first 2 hours, peaking to its day high of $25.93 and stood at $25.14 when we published our video. Well, today there's been a reasonable reversal. At the time of writing, which is 21:15 GMT, gold is standing at $1,717, up $35 on the day, and just above yesterday's morning's peak. And silver is up 84 cents at $25.96, some 3 cents higher than yesterday's peak, which is pertinent for when we look at the technicals. So what are we to make of this? Well, firstly, let's take a quick look at the US dollar index, and we can see that this is down below the 92 level and stands at 91.96. That's down 0.34 on the day. The equity markets, though, have been robust and some booming. UK and European markets closed up on average around 0.5%, while the Dow is up 30 points at 31,832. The S&P 500 is up 54 points at 3,875, but the Nasdaq has really soared and is up 464 points at 13,073. Much of this is the result of the 10-year note yield having fallen back against a backdrop fear that it may have continued its unrelenting rise due to inflationary concerns. And also, of course, which we'll mention in a moment, this stimulus package again. Technically, gold is a little more exciting than usual because it broke above the top of yesterday's candlestick, which is a positive or bullish sign. $1,750 is therefore potentially on the cards if yields fail to rise further, with $1,800 the next major resistance point. As mentioned yesterday, there are numerous support levels lying under current prices, but with the strongest foundation resting at $1,550 and then $1,500 beneath that, though we're certainly not expecting that this or next week for sure. Silver has been exciting today, and technical analysts are becoming excited themselves. They're looking at a push up to $27, then $28, onward to $30, and the bullish ones are saying, and once $30 is broken, $50 is not that far away. You can sense the excitement. To the downside, we still have the 200-day EMA at $24, but again, a lot of support levels between that and current price. But don't get too carried away right now. But it would be fair to say that the stimulus package, which is expected to be finally passed by the House of Representatives tomorrow and then duly signed by President Biden before the week is out, there may indeed be some opportunity for an upward move from here, especially in silver, and providing we can accept that this anticipated action has not already been priced in. Now, yesterday, Wholesale inventories for January were reporting positively at 1.3% compared with 0.3% in December. And the NFIB Small Business Index for February comes in at 95.8 compared with 95 for January. Positive showing for both. Now tomorrow we have the Consumer Price Index and the federal budget, which are worth noting. Big story though in the investment world is the surge in the Nasdaq. Now this is what Reuters reported literally just a few minutes ago, and we'll comment on it thereafter. Reuters article dated March 9th, 2021. Updated at 21:23. Headline: Nasdaq surges as tech stocks roar back. US stocks rallied on Tuesday with the Nasdaq gaining about 4% to recoup heavy losses from the previous session as US bond yields retreated and investors scooped up battered technology stocks. Tesla Inc. jumped the most in almost a year, while Amazon and Microsoft posted the biggest single-day gains in 5 weeks. The tech stars suffered sharp losses in recent weeks as rising yields raised concerns over their high valuations. The Nasdaq posted its biggest single-day rise since November the 4th. The Dow set a record intraday high but pulled back from earlier gains at the close. News that a $1.9 trillion coronavirus relief package was nearing final approval sparked a spike in yields on Monday, pushing the tech-heavy Nasdaq to end more than 10% below its Feb 12th closing high, confirming a correction for the index. US 10-year Treasury note yields eased to as low as 1.523%, after hovering near 13-month highs of 1.613% on Monday. Longer-dated yields have jumped over the last month as investors price in a faster rebound and higher inflation than expected at the start of the year. The market is adjusting to the new level in interest rates, said Christina Hooper, Chief Global Market Strategist at Invesco in New York. Companies whose products and services are in demand when the economy is doing well, known as cyclicals, and small-cap stocks will outperform this year, she said. Tech will end the year higher, but not be the leader as it was in the past year's rally. Today, the 10-year is down a bit, and that takes pressure off valuations, so tech is performing well, Hooper said. The market is just about getting comfortable at this level of rates. Rising rates disproportionately hurt high-growth tech companies because they're valued on earnings expected years into the future rather than profits earned in the short term. Potential headwind for the market is when interest rates rise further from this point over the short period, since they have risen too fast in too little time, said Michael Sheldon, Chief Investment Officer at RDM Financial in Westport, Connecticut. The Dow Jones Industrial Average rose 30.3 points, or 0.10%. The S&P gained 54 points, or 1.42%, and the Nasdaq Composite added 464 points, or 3.6%. Volume on US exchanges was 13.88 billion shares, compared to the 15.25 billion average for the full session over the last 20 trading days. The rise in Treasury yields has accelerated a rotation from stay-at-home winners to stocks primed to benefit from the economy's reopening, setting the blue-chip Dow on pace to end at a record high on Tuesday. While the Russell 2000 Growth Index jumped 3.3% on Tuesday, compared to a 0.1% rise in Russell 2000 Value Index, it has sharply underperformed its value counterpart since the start of the month. Shares of Tesla rebounded 19.6% from a deep sell-off that pushed shares down 37% from its peak in January to Monday. It was the largest percentage gainer on both the S&P and the Nasdaq 100. The global economic outlook has brightened as vaccine rollouts gain speed and the United States launches a massive new stimulus package the Organization for Economic Cooperation and Development said, hiking its 2021 growth forecasts. The Democrat-controlled U.S. House of Representatives will take up the relief bill on Wednesday, with the chamber's expected approval, leading to President Joe Biden signing the legislation into law later this week. The bank index fell 1.7% after vaulting to a new 14-year peak. Economy-linked financials, materials and industrials hovered near record highs. GameStop also rallied 26.9%, building on Monday's gain of over 40% on the video retailer's e-commerce strategy and speculation that small investors will pour stimulus checks into markets. Advancing issues outnumbered declining ones on the New York Stock Exchange by a 1.78 to 1 ratio. On Nasdaq, a 2.83 to 1 ratio favored advances. The S&P 500 posted 37 new 52-week highs and no new lows. The Nasdaq Composite recorded 240 new highs and 17 new lows. So, as we can see, equities are predicted to gain, and as the stimulus checks are eventually spent and the economy reopens, equities are expected to continue their advances, at least for now. Our caution is based on an old saying, and hopefully you'll have heard it here first, certainly for this year. Often muted within UK stock market veterans and experts, or so-called experts and traders, which may pertain to the United States this year. The saying goes, sell in May and go away, normally heralding then a early summer fall in equity prices. Will that happen? We'll wait and see. Much further depends on if there are even more stimulus checks and more loosening of monetary policy after this bout this week. What do you think? Do share your thoughts. Are you excited about silver now, having shot back up close to that $26 level and maybe looking to go beyond to 27, 28, 30 and then 50? Or is this just a temporary rise because of the announcement expected later this week? Share your thoughts, and if you haven't done so, do subscribe to our channel, pressing the bell sign so you're notified of our videos as and when they're published. The next one of which will be produced tomorrow. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.